Hello traders and welcome to the market opening preview on a Monday, June 8th, 2015. Traders coming to you live from Pattaya, Thailand, bright blue sunny skies, another hot one. But we did get some rain this morning, that was kind of nice. Traders, remember this is brought to you through FXCL Excellence in Trading. If you would come and visit us at fxclearing.com for your trading solutions. Traders, it's a Monday, so let's get moving. Got a lot to talk about today, and if you would, let me introduce myself to you. My name is William Gilday. I'm your moderator through the market opening preview series every single trading day before the London Open. Traders, I started trading in 2006. In 2008, I retired from a great 27-year career in the fire rescue department out of the great state of Florida. Traders, 9 days later, came to Thailand to celebrate my 27-year career. I was only supposed to be here for 3 months. Well, traders, I'm still here and loving living in Asia. It's a great place to retire. Traders, I do trade the markets every single trading day, not necessarily taking trades every day, but I'm listening to fundamentals, I'm watching technicals, I'm watching charts, and I'm looking for opportunities and probabilities that are on my side to be successful in my trading. And yes, traders, I do not win every trade. Somebody tells you that, like I always say, run the other way. All right, let's get the legal stuff out of the way. There's our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, though, is please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head over to news and commentary. Well, we had the big NFP on Friday. Took the market for a whirl, moved a lot of currency pairs, about 60 to 70 pips. Number came out at, 280, and they were expecting 223. So quite a big move on that. Now, you know I don't trade news, but I did grab a quick 10 pips. But I was in it. I was in the trade at full leverage. Full throttle. I was in it at full throttle. So I said, I just got to grab 10 and get the heck out of there. So I hit the old thing and we went for 10 pips. And that was a good Friday. But it was fun to watch. However, since then, the markets have basically just been sideways. Talk about the calendar today. The Aussie is on a bank holiday. So the Asia session has been very slow today. Really non-moving. Nothing going on at all. And remember, the G7 meeting continues today, and just keep an eye on that. It just takes one of those guys or girls to get on a microphone, and it can really ruin your day. That's about it. And, we have something in New York, and I quite don't remember, to be honest with you. My second laptop went down. It ran out of charge. So that's what's going on. Let's take a look at the indices, how they closed on Friday. The US 30 closed negative 0.31. The S&P 500 closed negative 0.14. The NASDAQ closed up barely at 0.18. And the Russell 2000 closed positive 0.82. And that's out of the U.S. session. Let's move over to the Eurozone. The DAX closed negative 1.26%, with the FTSE closing negative 0.80%, the CAC 40 negative 1.33%, and the Eurostock 50 negative 1.30%. Traders, let's move on over to Asia. These countries are currently trading. The Nikkei 225 currently is negative at 0.33%. Remember, Australia is on a bank holiday. The Shanghai is positive at 0.35%, and the Hang Seng is negative 0.29%. And ending our indices, the Kospi is barely in the negative at 0.17%. Commentary is, I think we got a good day coming today. It might be slow. Usually is slow after NFP gives you a big number. So we'll just keep an eye on that. But I think we have a good trading day ahead. I think we have a great trading week ahead. A lot of the currency pairs moved in the direction of the trend, which was bearish. As we know, most currency pairs are bearish. And, dollar strength rules, and dollar strength will continue to rule, especially with those good NFP numbers. I think we're going to see that keep keep pairs moving in that direction, and unless something big comes out. The big other topic that I wanted just to mention was Greece. They're really getting into it now. They keep having these extensions after extensions after extensions, and now I heard it's the end of June before they actually have to make a decision, and they've bundled what they owe the IMF, and it's really getting crazy now. However, the point is that we know it's been crazy. It's been this way for 4 years or 3 years, but the big point is that now the markets are starting to react to it, whereas before, when Greece was brought up, there was never no mention of what the markets didn't respond to it. Well, now the markets are starting to respond to the reactions that we're getting out of Greece. So just keep an eye on anything that comes out involving Greece. All right, traders, we're going to take a look at some charts. We're going to take a look at some 60-minute Forex charts. And as usual, on a Monday, we will start with the euro dollar. Traders, this was interesting to put together today. As you can see, price is hovering at this 200 exponential moving average on this hourly chart. And I could have fibbed this. I could have fibbed this and went to a 38.2 or 50% fib and, put it to take it down from there. My concern was this 200 exponential moving average. And I really didn't want to trade into the 200 exponential moving average. So being in the beginning of Asia, you can see that all the candles are below the 200. I did this trend line. This is a actually it is a 3-touch trend line, and I'd like to see price get below it. Now I don't know if that's going to happen or not, and I know what you're saying. You're saying, "Wow, that's a lot of pips." Okay, if you get a bearish engulfing candle, take it short, but just be aware that that trend line is there and it's a valid trend line, and you might get a bounce from there. We want to close below the trend line. The nice thing about the euro is it always gives you a second shot. Most of the time, it will give you a second entry. So we have basically two entries. You can enter now at the 200, or you can wait for the break of the trend line. And we'd love to take this down to previous support at 1.0939. Nice trade setup for today on the euro dollar. Let's move over to the pound dollar. Pound dollar has really done very well. It's been bearish lately, the last week, and bullish and bearish and bullish. However, we are bearish. We are way far away from the 200 exponential moving average. It's taken out some previous support. And price is actually at it right now. So we're looking at this 38.2. We're at the spot we want to trade this. However, it is the Asia session. There's no data, and Australia is closed today for a bank holiday. So we need to wait for London. We need to wait for London open before we make any kind of move on this, unless something extraordinary comes out that will move this pair. Remember, this is a commodity pair, so anything in any other currency pair can affect. Oh, I'm sorry, this is the pound. Sorry. Ignore that last statement. But anyhow, we want to take this, wait for London open. We want to take this below the 38.2, and we'll take it down to 50. I would take it like 59.85 and get out of there, because there's so many pending orders at that 5,200 level. Just look left of the chart. You can see prices reacted to that level all the time. So that's what's going on with the pound. Here's our commodity pair. There we go. Here is our Aussie dollar. It is bearish, and we are at a nice spot. We just need this to pop up to the 38.2 fib at 0.7644, and we'll just take this down to 7,600, or maybe, I don't know, maybe 76.15, maybe get out of there. We're basically where support is right now. But we'll take this down. But, it's not a lot of pips. It's only a 40 pip trade, and that's fine. Listen, if it goes up to the 50% of the 618, great. We'll take it. And it might take all day to do that. It is a Monday. And you typically, after a Monday, after a good NFP, markets are usually pretty slow. So be careful with your entries. Trade your trade plan. Don't deviate from it. Don't be moving your stops. Thinking, we think in our head, oh, it's going to go in our direction. We'll move the stop. Put your stop in, leave it alone, let the trade either work or not work. Right? Good money management skills. That is the key to successful Forex trading, because we want to live to trade another day. Capital preservation. All right, let's take a look at the Euro Aussie. The Euro Aussie has been really, it was up. Now it's really been, you can see the move on Friday, of course, from NFP really didn't affect it much. I got to be honest with you, pretty surprised. It did move, but the actual news candle didn't do anything spectacular. But now we're in this pretty big sideways action. Actually, all of Friday's trading day, it was sideways, and now we're sideways again. So, we're bullish in this. We want to take this to the upside. So we want this to give us a move above this 46.11 area, 1.4611, and that's a 50% fib. And the reason I'm saying that is because we want to make sure that this thing wants to go up. And we don't want to take a long trade where it's currently at, which is a 23.6, which is a very good fib to trade off of. But I don't like what I see left of the chart. Left of the chart, I see a lot of Forex junk. That's what I call it, Forex junk. There's a lot of support and resistance areas there, and I don't want to get in the middle of that mess. So I want this above 46.11, and we will take this all the way up to, well, we got plenty of room. We can go all the way up to 48.14, which is the 161.8 fib extension. So good trade plan. Don't know if it's going to work today on a Monday, which I think is going to be a pretty slow trading day, but we'll see. Especially that Asia did not react to NFP. No movement in Asia. Euro yen, again, we're bullish, and we're just waiting for this to clear this 50% fib. Again, prove to me you want to go long, and I'll take you long. But again, no big reaction from the NFP actual candle. Again, sideways all the way through New York, and took a notch down here in Asia, and now we're just waiting to see what happens. Again, this is another pair where, it's a London Open pair, and I would say, most of these pairs, we're just going to have to wait for the London Open and see what kind of price action we get and what kind of burst we get, because Asia really has no volatility today and it's just not moving at all. So you shouldn't want to be entering the trade now. And the last of our 6 currency pairs is the New Zealand dollar, which is traded very nice. There was one of those big red candles. Nice 70 pip candle, right? 60 something plus candle. And just moved all the way down. So we want this to give us a notch up, at least to the 70-77 area. I know you're saying, Bill, that's 40 pips away. That's okay. Get the pullback. Let's get this pullback, because when we get back to this 23.6, remember, we're going to get a bounce there. This has been support now most of New York afternoon and now into Asia. So we got a nice blue candle now. Let's see if this pops this and brings us up another notch, and then we could take this short at the London Open. And that's what's going on with the New Zealand dollar. Again, remember, this is a commodity pair, and we have that G7 summit going on. So anything can happen if somebody gets in front of a microphone. And trust me, they will. Traders, on behalf of myself, William Gilday, and our great friends at FXCL, Excellence in Trading, thank you for joining me on a Monday as we start our new trading week. Excited to be with you, excited to get trading, excited. I just love what I do. It's just absolutely awesome. Traders, please come and visit us at fxclearing.com for your trading solutions. Traders, always remember to trade smart, not hard. And till next time, have a great trading day, and we'll catch you later. Take care now. Bye-bye.